All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Hope you had a nice weekend. Market is kicking off here today with some of the continued chop, that we have seen, and it's a little wild out there in a few areas, but overall, it's the same choppy mess that we have seen, where things will jump a little and then drop and pop and drop. And, we just continue to see this, this action. We saw Caterpillar last week, leading nicely. Okay, is it going to break out of its funk? Nope. And down it goes here. Same with an Apple or a Microsoft or, a Facebook, Boeing. Across the board, we just have, we have some, pretty strong weakness, I think is the right word there for it, with stocks overall. We see bonds pushing on higher here today. They were set to gap down, but then we had the ISM data, the ISM manufacturing number, which we'll go look at, and one of the worst numbers in a very long time. So definitely going to make headlines there. But we'll go talk about the implications of that. We see gold pushing on higher again here today, pushing up into its recent highs. We see oil taking it on the chin here this morning, pulling on back towards, some of this month's lows. And that is, pushing some of the big oil names, the Chevrons of the world, which had a nice week last week. The Exxons of the world, on down, the energy sector, on down aggressively here today. But perhaps one of the worst sectors on the board right now, I should say the worst, but one of the worst are the banks. Banks getting hit pretty hard here today. JP Morgan, Bank of America, and these are stocks that really recovered nicely last week. Really had a strong last 3 days of the week. They gapped down on Wednesday, performed very well Wednesday afternoon, Thursday, and Friday, and basically in one fell swoop, giving up the entirety of their gains there. Now, for the challenge, there are no new signals on the board right now. We have Microsoft and Apple. Microsoft trading at 228. Apple here at, let's see the option, Apple at 320. So let's go plug these in. 228 and 320. So that leaves us down, a little more than 1,000 on Apple, just under 1,000 on Microsoft here. Neither stock. So Microsoft, the stock right now is 136.49. So it's about $1 over its stop level. Apple's getting closer to its stop level. Its stop level here is 203.79, and the stock is 204.56. So, less than $1. We might get stopped out of them here today. We'll see kind of how that shapes up. But definitely not a good start here for either stock, and certainly brings the auto exit date for tomorrow into play here. So, holding those, no new signals on the board here this morning. There are some crossovers happening here to the downside. I'll show you a few of those here. Let me see if I can just pull up the scan. Not a lot of these have strong bearish potential as far as a signal. But we do see a few crossovers coming in. Alcoa, Apple, Bristol, Conoco, Chevron. You'll notice the energy, JD, Las Vegas Sands, Under Armour, Vulcan Materials. Vulcan Materials seems to be on the bull list when the market's going up, bear list when the market's going down, and it just continues to chop around here. But that's the list here. Under Armour, interesting. This is one where had a nice recovery last week, pulling on back. Very interested to see if it actually sets a higher low here, where it would ultimately give a bull signal, similar to what we saw here in December and January. But nothing to indicate that right here and right now when it comes to Under Armour, but not a bear signal there for it. Okay, so that's where the challenge sits, and we'll kind of see how things shape up here this afternoon. Would be really nice to get a nice little relief rally on Microsoft and Apple, and be able to hold them for a chop back the other way tomorrow or even this afternoon. But we'll see how they play on out. Apple has some just really kind of funky gap action through the chart, where we could talk about some of the bullish gaps, some of the bearish gaps that are here, but either way, it's just not going anywhere, just not getting any traction here over the course of the last 2 months. And a lot of stocks, you look at them over the last 2 month time period, a lot of stocks look like Apple. They have a little bit of blip up, a little bit of blip down, but really just trading at the same price over the last 2 months. Microsoft, same way. Many other stocks, in that same way. And the challenge has done a really good job of keeping us out of, some of the chop or a lot of the chop. But, it has been an extended period of chop. And the few signals that we have seen just have not had, any of that follow through. They've been caught up into the chop here as well. All right, so ISM data here this morning. And if we look at, the market, the S&P, you can see that, the market gapped down, but then we see this drop right here on S&P futures, and this is a drop of about 20 points. Now, this drop happened on the release of the ISM data, and it's, it was definitely driven by the ISM data. And the ISM data is not something that's been much in terms of a big market mover of late, but this number caught headlines. And let's go take a look at it. The number came in, the overall headline number came in at 49.1. Now, 50 is the midpoint. Above 50 is showing contraction, below 50 or above 50 is showing expansion, below 50 is showing contraction. Okay, and this is with the manufacturing sector, and you can come in and take a look at everything that's being said by people about it. But this is the first time since 2016 that we've seen a contracting number. And if you look, the overall number, 49.1, dropped from 51.2 last month. So it went from growing to contracting. We saw a big hit in new orders, big hit in production, big hit in employment, supplier deliveries, inventories, which you could argue you want to see go down. They went up. Customer inventories went down. Prices went up. Backlog of orders went up, but they're still strongly contracting as they have been for the last 4 months. And then exports and imports both fell. This is one of the ugliest numbers I can remember seeing in a long time. And this is data I follow pretty closely. It is just across the board, down, 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 and nothing really to look at and find much of a silver lining. There's just not one. There just simply is not one here with it, except for one small thing. If you're bullish, this is what you're going to look at. You're going to come in, you're going to look at the ISM data over the last 10 years, and you're going to notice something. That the ISM data went into contraction here in late 2012, early 2013. What happened to the S&P? Market took off and shot higher. Also, end of 2015, early 2016, ISM went negative. What happened in the markets? Markets bottomed and went on a 2.5-year run. We now have the ISM, which is, really contracted. We're into this contraction period. Will we see something similar with stocks? Are we talking about now stocks that are in a very oversold position now because, we are seeing maybe most of the fear priced in? I think if you're bullish, that's the argument you make. You make the argument that, hey, there's a lot of fear priced in here, and so chances are we go higher. But I don't know that I would put a lot of validity into that, given what we see, just simply because there's a time element, right? You'll notice this chart, we're looking over 10 years. This isn't a one day it's down, the next day it flies, but most certainly a downside number. Is it going to get to the attention of the Fed? We'll see. It should. It definitely has in the past. When the ISM number has gone negative in the past, we have seen the Fed react. We have seen the Fed come out and really speak to it and speak about it and speak to the fact that they need to do something to improve it. In fact, we saw quantitative easing measures come in back in 2012. We've seen a lot of different measures and comments from the Fed back here in 2016. So it's one where I'd be very surprised if we don't see some sort of Fed reaction to the data that this ISM data that we see here this morning, but not a pretty number by any stretch there. So that's the ISM. Some of the chop we're seeing out there. The new tariffs, they kicked in here over the weekend. We have Chinese Hawaii. They're basically coming out and saying that the U.S. has launched cyber attacks against them. So it's a pretty negative Monday morning environment, to say the least, here for equities and just for the general tone here of the market. Will it have downside follow through, or will it chop back up? If patterns hold true, we're going to see some more chop. But it is just one where which news event, which catalyst is going to create it. Yeah, there have been quite a few. So before I hop off, I want to address a really good question that came in this weekend. And I said, Jeff, I understand the challenge is designed to do well in trend and to simply survive the chop, but what if and I'm paraphrasing, but what if we look and say, well, in choppy markets, we do something different than the challenge algorithm, and then when we have trending markets, we do the challenge algorithm? And a really good question, and one that I promised I'd comment on. And when we look at a market, right, markets, they trend and then they consolidate, right? They trend and consolidate. And, it's one of those where, what is the market going to do next? Is it going to trend or consolidate? Well, that can be a little nebulous, right? It's not like you can look at the market today and go, well, the market over the next 3 weeks is going to be trending, or the market over the next 3 weeks is going to be consolidating, right? We can look at some indicators and things like that and have a pretty good feel for it. But, to fully predict what the market's going to do there in terms of trend and consolidation is rather difficult. Now, we put together a tool a while back called the Market Vibe. And the Market Vibe has done a fantastic job of identifying bull markets, bear markets, neutral markets. It has been, a great indicator. You can see what the performance metrics look like here since 2015 when we started it, and the performance metrics have been fantastic. If you look at what the Market Vibe has done over the course of the last 2 months, it's been whipsawed. Even the Market Vibe has been whipsawed, quite a bit. We don't see that very often. Yeah, the Market Vibe gets whipsawed, right? That's not something that's like alarming or, wow, that's crazy unusual. No, but it is something that we see get whipsawed. Is getting whipsawed quite a bit over the last little while. And so it's one where you go, okay, well, we get a bullish signal. All right, we're going to get into a trending market. Get whipsawed down. So, even if we were to use something like the Market Vibe, which when we developed the algorithm for the challenge, we looked at applying an element of the Market Vibe, and we just couldn't find anything that was super accurate there with it. We found that the other things just kind of went along with it more than it giving something of a different signal. But it's just one of those where those whipsaws are going to take place, and they're simply no fun at all. So I'm not going to sit and go, well, you know what? I can predict, well, the market's going to be choppier, the market's going to be trend. Why? Because at that point, I'm not going to be able to be on board when the trends start and when the trends go. Case in point, we grabbed a couple nice trades right back here, right? This is where the market set a new low. We weren't coming off of a higher low. This wasn't kind of classic, beautiful trend setup there. And, it's one where if I'm trying to go, well, trend versus consolidation, most of the times after we have a pullback like this, we get more consolidation, right? And that would be the norm. Well, it trended. Right, it went and it trended. Had I been sitting there going, well, I'm going to wait for trend. By the time it starts to trend, we're getting up here where the signals just haven't been nearly as good, haven't been nearly as favorable. So to apply that, yes, I'm open to it. Right, I just haven't seen anything that would that could be applied that would take away. The chop elements without taking away the trend elements. Because most of the time we see the best trend signals emerge when the market's chopping, and then we see the market go into trend. And that's when we tend to see the best signals come into play. And even with some of the stocks that we've traded here for the challenge, right? We traded Bank of America twice and got some nice moves. But you look at both times, what was Bank of America doing right here? Right? I mean, it was Chop City. And we ended up getting a signal right here. Right? And then what do we have? We have Bank of America goes back into Chop City. We get a signal right here. Right? So, the signals, they tend to come in these chops, and it tends to be a sign that, okay, the chop's getting ready to end. But, when it doesn't, when we get the signal, the chop doesn't end, and we get caught back up into the chop, it's most certainly is anything but fun. But in terms of being able to go out and say, well, because let's start to filter out environments, what I found is that when I go and start to do that, then it takes a lot of the upside out. It takes some downside out just because there are fewer trades, but it takes a lot of upside out as well. And don't want that. And the reality for the challenge, we are going to have challenges with the algorithm go to zero when the market's in, chop city. But we're going to have, when the market's just trending even a little bit, we're going to have some really, really nice gains and be able to really stack things on. And, when the market goes on a pretty sweet trend over the course of a quarter or something like that, which, it does every once in a while, our chances of hitting 100,000 or even more become significantly elevated there. So anyway, that's my 2 cents there on that. As a reminder, this challenge does come to a close on the 20th of this month. We'll start the new challenge on the 26th, and be off and rolling. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you later. Take care.